everybody. Welcome to PitchUs. We've got another exciting episode. My name's Tim. I'm the author of the Pitch Deck book and the executive director for Park City Angels. Joined with me is Jeff Erickson. Jeff, why don't you do an introduction?
Yeah, quick intro. Jeff Erickson, currently with Forecaster. We do financial modeling for early stage startups to make it simple for founders. Also an active angel investor and startup advisor. So excited to be here with you again here, Tim.
Yeah, this is awesome. All right, Bo, so why don't you go ahead and share your screen and then go right ahead and pitch us.
All right. Well, thanks for letting me join your guys' show. I'm excited to be here. To just start off, I just wanted to kind of share a little bit of background about why I'm doing InsideFluence and how we got to this point. So I've always been the type of person that's thinking of business ideas, and a couple years ago I was kind of exploring one of those ideas, and as we were thinking about and contemplating how we would take it to market, we thought that one of our best strategies would be to utilize influencer marketing. So as we started to look into that, I found out how difficult it was to do influencer marketing and to find influencers that would really be able to drive my brand and to reach my target customers. And so I was looking into other platforms that I could use to help me with that. And I found that there wasn't really anything that was tailored to a startup or that met my needs as a startup. And so that's how InsideFluence was born. I wanted to build something for startups to help them launch and scale influencer campaigns that would help them launch and scale their companies. So as I said, influencer marketing is difficult, and businesses, they encounter lots of problems as they get into influencer marketing. It's time consuming, it's difficult to find influencers, and so we want to solve those problems, and that's what InsideFluence is for. We are here to help companies run targeted influencer marketing campaigns and help them launch and scale their companies. So here's a little bit about our technology. We have a web-based application where businesses, they'll be able to find and connect with industry-specific influencers and manage their campaigns all in one platform. So they'll be able to find influencers, search for them based on different demographics, and then really analyze the results of those campaigns and identify which influencers are performing best and if they want to continue a relationship or not with some of them. They can also do automated outreach, which will really reduce the time that they're spending reaching out to influencers, especially if they're not getting a lot of feedback from them. We're also having influencers on our platform, so it's a marketplace with both businesses and influencers. They'll be using a mobile application, and similar setup for them. They'll also be able to reach out and connect with brands, so they can kind of take it into their own hands. If they see some campaigns that they're interested in, that they're a good fit for, they'll be able to apply for those, and businesses can also reach out to them and request that they join their campaigns. They can get paid through the platform and manage their entire campaigns and different relationships that they have with businesses on our platform. So the market's pretty large. It's over $16 billion currently being spent by brands on influencer marketing, and that's exploded over the last 5 years. So over the last 5 years, there's been over 850% growth in that industry, with projected growth that's really good as well, almost 32% of a compound annual growth rate. So they're projecting a market growth of $27 billion over the next 5 years, so more than doubling where they're at right now. And so where we are focusing on startups, we figure that our market size and our serviceable obtainable market should be able to get us to about $20 million in annual recurring revenue with the way the market is right now. So how are we going to get there? Our launch strategy is actually to partner with different businesses who are already working with startups. So startup accelerators, companies like Forecaster, who are working with a lot of startups currently, and will be able to kind of introduce us and give us access to different startups. We are launching with startups and marketing agencies as our priority user base. And then we're currently working on growing our wait list for our projected launch date of January 1st. right now, so we have businesses. The business model is that businesses will be paying a monthly subscription to us. So there's different tiers based on the services that and what they can get in the different tiers. Starting at $150 a month, you'll get the main features, the core features that every startup would need to be successful. And then depending on what they want, different analytics and things like that, then they can go up to the different tiers. And then influencers is actually completely free for the influencers to use our platform. We just take a small fee in the revenue that they earn. And then to incentivize them to stick with us and to continue to grow on our platform with us, that fee actually decreases with their lifetime earnings on our platform. So the more that they earn, the less we take from them over time. Just a quick competitor comparison. So there are a handful of different companies who are doing similar things. Upfluence and Aspire are a couple of the major players in this industry. We'll all be doing outbound search and discovery and campaign management. So that means that businesses, they'll be able to search and find influencers just using APIs to connect to the various social media platforms and then manage those campaigns on the platform. Like Aspire, we are a creator marketplace, meaning that we have brands and influencers on our platform. So influencers can apply to campaigns, and then brands can also reach out to influencers. So it goes both ways. What really sets us apart is who we're focusing on. We're focusing on the startups and kind of that group of businesses that are being left out of the other of our competitors and what they're offering. And then our mobile-friendly app is actually a huge differentiator from the conversations that we've had with different influencers. They get frustrated having to go to their computer and not being able to manage everything on their app. And so this will give them the opportunity to just do everything from their phone and not have to go back and forth. So I have an accounting background. I am the CEO of InsideFluence, and so I've got an accounting background, got my CPA, and I'm the current controller of a company here in northern Utah. Devon, my co-founder, he brings a lot of experience to the table. He has over 25 years in sales and marketing and is the current president and CEO of a company here in northern Utah. And then Jaden, he's our lead developer, who has over 8 years of experience developing full stack web and mobile applications. And he's here local. He's one that we talk with regularly and can go to with any problems that arise and can get those resolved quickly. So we're excited about our team, and we feel like we've got a good team to set us up for some initial success. About a year ago, we joined the Launch Peer Accelerator program. They've allowed us to really get a lot of success and get a lot of wins up to this point. Got us to where we're at. We've developed our prototype with them. We incorporated as a Delaware C Corp. And then they've also assisted us in getting multiple letters of intent from businesses and other partnerships that we've secured, resulting in various potential businesses and agencies and influencers recruited to be our first users once we launch. A timeline, so right now we're raising a pre-seed funding round on WeFunder. We're raising $50,000 to $200,000, and the funds will go towards software development and then just initial 6 to 12 months of runway. We look to hire an industry expert in the first year, someone who's in the details and is currently doing a lot of influencer marketing and those types of things, and will be able to give us some increased direction as we continue to grow. And then in years 2 and 3 and beyond, we will likely raise a couple of additional seed funding rounds or Series A round down in the future to help us continue with our growth. And this is just a quick snippet of kind of where we project to be financially. So based on where we expect to be in terms of growth, we think that by the end of year 3, we should be anywhere between $1 and $3.5 million, with the most likely case being somewhere around $2.5 million in annual recurring revenue, with the majority of that being subscription based. And that's InsideFluence. So we're super excited with the progress that we've made so far. We're excited for the coming months and excited to launch hopefully at the beginning of January.
Okay. Great job, Bo.
Thank you.
Yeah, so let's start off with some of the things that we like. Jeff, why don't you start us off?
Okay. I actually like this space. I deal with a number of companies that could really use this. And I think there's also the demand on the influencer side. So the marketplace concept, I get it. I think there's some demand there. So I really like that. I liked how you put a lot of it together in terms of, the story and how it flowed. I thought it flowed really nice. We'll get into some things that were maybe missing and, some gaps there, but those are all things you can take and, update as needed. I thought you started out with, you seem like you have some good branding and it started out really good and then it didn't always flow all the way through. And so I think that's something that you could work on again, get a graphic designer from Fiverr or something, and it probably fixes that pretty quick.
Yep.
Thank you for the shout out with Forecaster. That was really cool. Way to know your audience. And also, we do have a relationship with LaunchPeer, and so I know the LaunchPeer folks quite well. And again, a great background for you guys to have. I'm guessing that most people probably won't know LaunchPeer, but maybe throw in their logo and give a little bit more context to what LaunchPeer is, what they do, would be helpful because I think they're a solid group and it's impressive. You've been through the program. It kind of gives you a little bit of credibility if people know who LaunchPeer is.
Right.
And then it's super cool that you're doing a WeFunder. So I really like those guys, and it'll be interesting. I'm excited to see how that goes for you. There can be some positives and negatives on that front. So I'm interested to hear Tim's take on that because I am a little more familiar with WeFunder just because we also have a partnership with WeFunder. So I do work closely with those guys. That's not going to be the case for a lot of investors, and sometimes that can be a negative as much as a positive unless you do go in and explain it, say this is where it's going to get us and this is where our next thing is. So we can get into some of that here on the feedback, but Tim, I'll let you take it from there.
Yeah, I think overall it was a really great presentation. I think you hit a lot of the good points. We'll talk about how you can get more detailed with some of those points. Your timing was really well done. So kudos on that. I think that you just presented really, really well. And I think if we can reorganize some things and then help you highlight some of the areas that we're missing, it'll be good.
Yeah.
But overall, this is not a bad first. This is a very good, I would call it a very good first pitch.
Thank you.
I think you did a great job. But yeah, I think we should let's focus on ways we can help you.
Awesome.
So Jeff, why don't you start there?
Yeah, sure. And I'll echo that. You guys are obviously very early stage, and we'll start off with, when you go through establishing the problem, I think you did it but it wasn't concise enough. I don't think. I think you really did need to say, look, this is the problem that we're solving, and just get right to it. This is the problem that's out there. This is why it's important, and let's dive into our solution. Yeah. I think you could do some, maybe Tim has some ideas on how to do that a little bit better, but I thought it was lacking a little bit in terms of identifying the problem really solidly, if that makes sense.
Yeah. Let me add to that real quick, just since we're on it. I think this is one of those company types that we've seen. Jeff, I'm sure you've seen other versions of this idea. So keep in mind that this is a very hot space. So we've probably seen, and most investors have seen something similar or close enough. So you have to be very detailed on the problems that the current solutions, there's way more than two. Yeah. So we're covering on your competition slide, there's way more than two. Mm-hmm. So really come at this, not necessarily like search isn't great. Like really find that niche that you're going after.
Right.
And like maybe it's like there's just not a great solution for people in the boating space. I don't know. I don't know. Like, but something like that where we can get on board with the problem really early, because this is someone's gonna win.
Right.
Don't know who it's gonna be. All right, sorry, Jeff.
No, thank you. I thought that was perfect. When you get into the problem and you have a slide where it talks about the demand for the things, I think right there you started to get some really small text in your slides, and so as you're presenting, one, I don't have time to read it all, so there's a bunch of text down there, and it's way too small for me to read. I actually open up my screen, try and get to it, and then by the time I get to it, it disappears and we're on to the next slide. So it can, one, be distracting, but two, you want to make sure that I'm focused on you presenting and not trying to read every little.
Just read the slide.
Yeah. So be cognizant of that. And it wasn't just that slide. There were a number of slides that had pretty small text and a lot, probably too much text on them. So go through and kind of clean that up. Tim, I think you've got a recommendation in your book. What is the font size? I forget, but
no smaller than 22.
Okay, no smaller than 22 font, and then I think you always give some advice. Present as if you're presenting to old people that can't see, because
the other rule is take the oldest person in the room and then divide their age by 2, and that's the font size. So if the oldest person is 70, then the font size should be no smaller than 35. But 22 gets pretty close.
Yeah.
And I think
that's a 44-year-old, but
you can find that information, I think, in your book, right, Tim?
Yep.
Okay. So that's the other thing. You probably had to read Tim's book, the pitch deck book. I think you would honestly, I think you'd really benefit from.
Yeah, totally.
There. So, okay, a couple more notes here. The one thing, when you talk about the market size, you came into it going, yeah, the market's pretty big. And, that's not what I want to hear as an investor. I want to hear this market is huge and we're going to take a good chunk of it because of this. And this is the opportunity. And depending on your investor, I guess, if you're going with angels that are saying, okay, where can we get in right now? And where's this going to go 3-4 years and it's going to be acquired, then great. Then maybe 20 million in ARR is okay. But for most, if you're going to start to go down the path of venture capital and raising, aspiring to raise venture capital from institutional investors, a $20 million ARR is probably not going to cut it.
Right.
So either, and again, I don't think you want to highlight that. You make the market bigger and say, what other things can we do? Or what are the answers? That's a stepping stone to this next thing. Right. But there's got to be a bigger market opportunity there. I mean, rule of thumb, if you're going down the venture capital path, you're looking for more like 100 million ARR is probably what's going to get some interest.
Yeah.
So just FYI. Now, I think it's a good point for our listeners as well, is that not every company wants to go down the path of venture capital, and that's okay. But I think you want to also identify that, and there's another missing link here, and maybe we'll jump into that. And that was on your ask slide.
Yeah.
So there was no ask at the end where, I don't know how much you're thinking the company's worth right now, how much you did mention how much you're going to raise. And it was a fairly small amount. I mean, it's like 50 grand through WeFunder, 50 to 200 grand.
Yeah.
And so I'm not sure what your ask is for me as an angel investor. What do you need my money for, and how much do you need, and what's it going to get you? So there were some big missing pieces there. And if you could show me that, hey, if you drop, a couple $100 grand in right now, and we've got 20 million in ARR in 3 years, and we're going to get acquired by this company, or I'm going to get, we've got a good exit strategy or something.
Yeah.
You're going to like, 20x your money. Then now you've got my attention as an angel, maybe not as a VC, because they're not going to write a $200,000 check. They're looking more to, a couple million probably in legs that way. Anyways, Tim, do you have anything to add to that? Because I know I talked way too much.
I totally agree right there.
Awesome.
So,
Okay.
Yeah, that was some great feedback. Thanks, Jeff.
yes, hope that's helpful.
Yeah, absolutely. Definitely. We'll definitely take that into consideration as we move forward and make some changes. And yeah.
Cool. So on my end, a couple things that might help is as you redefine this problem statement, you're not wrong. I'll say that, but it could be done a little bit differently. If you were to compare your problem statement, which one, the font was super small, like Jeff mentioned. I was trying to find where you were talking and I couldn't. But it should mirror in your solution statement. So you had two solution slides that had a list of things. And then you had the super small list on your problem. They really need to be mirrors. Like influencers can't do this. And here is the solution on how we did that. Show us a wireframe, because that's really a nice, beautiful way of doing both of those things. Obviously, if you have the technology, then show a screenshot of it.
Yeah.
But since you are earlier, wireframing is actually just fine. Like most of us don't know it's a wireframe versus the actual application. When you get to the next slide, right after solution, talk about the revenue model. I'm going to preach on this because people think to put it later. It's right away. There are 3 questions we have as any investors. Why are you doing this? What are you doing? And how do you make money? And if you get those 3 things out of the way, which is problem, solution, and the financials, you've already tackled 80% of what we're interested in learning. The rest of the stuff is just like, okay, are you the right people? Is the market big enough? Those are like the smaller details that we still need to know. But those first 3 are literally the foundation of the company. So move that one up a little bit.
Okay.
A question that's going to come up, honestly, is how did you validate pricing? You don't have to answer it today, but this is a question for a lot of people, especially in a dual-sided market like this. It might be worth it because you're early to explain if you guys did some market research, how did you come to these numbers? Just something to consider as you're developing it.
Yeah.
Because you're talking about the financials and how you get paid, it really makes sense to go into that projection slide afterwards.
Okay.
In your slide, I think it was the second to last or third last slide. And I was like, okay, so he's charging, I had to remember, you're charging $150 per subscription. You're going to get 71 subscriptions. What investors are doing, and this is the secret, it's in the book, they are running numbers in their head really, really quickly. So when you put those things together, it really helps us paint this big picture of what's happening.
Gotcha.
When you separate it like that, one, I get confused and I have to think really, really hard back to my notes, so I'm not paying attention.
All right.
So Jeff mentioned WeFunder. There is some weird things that happen with crowdfunding platforms. If you can show you launched on it and had a great success and now you're doing $2-3 million in revenue, great story. Just recognize that some investors will not be part of that conversation, no matter how good the company is. And then others don't care. The hard part is you don't know. Right. There's no way of knowing. But I love those platforms. I think they're great tools to get launched, just like Kickstart. But just be careful because that is an issue for, maybe some VC people.
Yeah.
It messes up your cap table. It really doesn't, but there's this feeling that it does, right?
Yeah. Yeah. That has been a stigma that is changing. Right. I mean, it is changing. So there's a good thing there. Most investors, if they're pretty active, they get it. And WeFunder, for example, does allow you to put it all into an SPV, and so it shows up as one line item on your top table. So it is nice that way. The other way, I mean, if investors start digging into something like that with, tell us more about the crowdfunding and why did you go down that path? The other thing is, look, we have some really passionate customers or influencers that wanted to get in and this was a great way for them to get in as unaccredited investors. So, they have some reasons behind that and some positives, but
that's a beautiful story.
Yeah.
Like we've got 100 people who aren't accredited, who are part of our marketplace, who wanted to be involved, and it made sense to launch with them as our people.
Yeah. Make it into a positive story.
Awesome. Cool.
So you're launching in January 23, not an issue. One thing I will say, so you put your ask kind of in line with a timeline. And I will say that I would say that timeline actually had a lot of red flags for me. You raise 200K today. In a year, you're going to raise 200K. And then in another year, you're going to raise 200K. That means you're not growing, right? Because think about it this way. And as people, use a tool like Forecaster, they just did a great post recently about how to figure out what your raise is. But a real quick rule of thumb is $100,000 per hire. It's actually higher than that, but you can start figuring out like, oh, you're going to hire 2 new people, then you're going to hire 2 new people. And I'm like, you're not growing very quick is really what you told me. And so keep those numbers in mind. I would have rather seen we need 200K now. We're going to raise probably in another year. Don't know what the number is. It's kind of irrelevant. Here's the major milestones that we're going to hit over the next 12 months. And the raise that you should be doing is for 12 to 18 months. So if you need 600K, you're doing a campaign. You can split it up. It's called tranching. So we're going to do a 200K round through crowdfunding, and then we're going to start our true angel round for the next 400 or whatever.
Yeah.
I actually really love that because as an investor, you're kind of de-risking my money before I put money in.
Yeah.
Yep. Something to think about.
Awesome.
Okay. I will say, so your team slide's another, especially since you're really early, I think you have amazing team members, but there's 2 areas that are really missing. It doesn't seem like anyone on your team has sales experience. I don't know if that's true, but it didn't feel that way, even though you have the CEO of seems like a good company. And the other one was somebody without marketing experience. And I know you mentioned that as your first key hire. I think today you need to offset that with a really solid advisory team.
Yeah.
And that wasn't mentioned at all. I usually say don't spend time on an advisory team, except for in this case, because they really are going to fill those holes that you guys don't have.
Yep.
So think about building out that advisory board as well.
Okay. Yeah,
I agree with that. I think you could round out your team a little bit more there. And, I wanted to know, there was another question I had, and maybe it's the way you presented it, but, are you guys full-time on this? Or is this like...
We're not full-time on it yet, no.
Okay. Yeah, and that's kind of what I was thinking. And especially where you were talking about, we have this tech guy that we can go to if we need to. It doesn't feel like he was part of the team. He's just kind of almost more of an advisor. And so I wasn't super confident about the team, quite honestly, just from that aspect. But it makes sense that you wouldn't be full-time and you're raising a small amount, you're early, you're a ways away from launch. So.
Yep.
Yeah. And I mean, in general, you have all the pieces. I think focusing some areas to make it really tell the story better will be really good. And then finally, always end with the ask slide. Here's what we're looking for. Even for the crowdfunding campaign, we're looking for 200. We're going to accomplish these things, and here's where that money's going.
Yeah, definitely.
Don't do a contact me slide or a thank you slide. That's my pet peeve of the world. I'm trying to get people to stop doing that, because the reality is, in a real presentation, it's the most viewed slide. It gets the most airtime, and it allows us to remind ourselves what you just presented.
Yeah, definitely.
Yep. So in with an ask slide.
So Tim, I'm surprised you didn't hit on this one, but the competition slide.
Oh, I did briefly, but
I wanted to come back to that. There were a couple things on there. I think having 2 competitors is way too few. You need to scope out the competition a little more. The other thing is the InsideFluence logo was so small that I'm like, who is that? Well, that should be the big one, right? That should be the one that we're shouting about. So do some work on that slide and find some other competitors and some advantages you guys have in that space.
Yeah.
Anyways.
Let me add to that. So really what you should have on that competition slide is kind of those 3 features that were the problems and why you started this thing to start with.
Mm-hmm.
Those 3 key features, because remember, you're reminding us of what you're doing. It's been a while.
Yeah.
And then you're going to throw some other features like mobile friendly, I guess, or whatever. Be really careful with those 2. You have 2 that are your differentiators, startup friendly and mobile friendly. Those really aren't really differentiation, right? They're mobile friendly, like that's just some code. They could fix that in a month if they wanted to. And then startup friendly, maybe there's a reason for that, right? So, Jeff and I work up with startup companies all the time. They just don't have money, right? So you could go get a $5 million deal from Microsoft or a $50 deal from my buddy down the street. And so make sure that when you talk about this competition, there's a real differentiation between the other platforms and yourself. And I think that those 2 that you've kind of highlighted, 1, they weren't brought up in the beginning. They kind of were, but not really. And then 2, I don't know if that's really what you're trying to say.
Right. Gotcha.
Does that make sense? Okay, cool. All right. So come down to it. Based off what we heard today, Jeff, would you take this company to due diligence?
Yeah, probably not right now. It's a little early for one, but I think there's some things that you can clean up as well that will increase the confidence of those that are going to be giving you money. Now, the good thing is, WeFunder, I think you can present this in different ways to say, as an influencer, you want to be investing in this for these reasons.
Mm-hmm.
There's some, you're going after unaccredited investors that might have ancillary objectives. And so I think there's a good thing there. But I think as you start to go down the path of getting angels and eventually institutional investors interested, you need some work on your pitch deck and some of the things that we talked about.
Okay. Yeah.
Yep. And I would agree with Jeff. For the group that I work with, it's just too early for us. And I think that those traction metrics are really, really going to be key as you guys launch. I think we've talked before, I'd love to see what you're doing in a year from now.
Yeah.
And that's a completely different story.
Great.
The deck's probably not going to be that much different, actually. It fundamentally speaking, but like you'll have a lot better, clearer idea of what the problems are and then how you're solving them. And then you got, 100 influencers that have backed you. And that story is really, really compelling. Yeah. I don't know, obviously we're making things up, but.
Hey, one other thing I wanted to bring up, Tim brought up a point somewhere in here where we were talking, now I've lost it here, but we started going down the path of, oh man, now I totally forgot where I was going with this, but there was something where he asked you a question and said something about your pricing. Had you done your price discovery? And I thought that was really actually an interesting point. And I am curious for one, but I think it'd be good for the listeners as well to know, have you done some price discovery, gone out and done customer interviews and figured out where that pricing might make sense?
Yes, we've looked at other competitors and what they're charging and where we kind of want to target the influencers, and we've kind of made a lower tier for them as well, and then been more competitive on some of our higher tiers as well for the growing companies and for marketing agencies. So yeah, we've looked at the competition and based on what they're charging, kind of made our pricing as well.
Okay. All right. So doing some of the competitive now where they're not going after startups as much, have you gone out and tested that, price point with target markets that way? Yeah.
So with the letters of intent that we've got, we've kind of presented our business to them, shown them the prototype, walked them through the prototype, shown them the pricing. And yeah, so far we've gotten some good feedback from those companies. So
okay,
that would have been good to know.
Yeah, I agree. I think the letters of intent, tying that into your pricing, it kind of validates it and says, hey, we've got some data that backs this up. So yeah, good points.
Awesome.
Awesome. Well, Bo, thanks so much for presenting. If you guys need help with pitch decks, we love doing this. Please apply to be on the show. First of all, you can always reach out, check out the book, the pitch deck book. If you need help with financials, check out Forecaster. There's always a link below. And thank you guys so much, and we'll talk to you soon.
Thanks, guys.
Thank you.